Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about Alibaba, ticker symbol BABA. I put out a video about a week ago on Alibaba doing my price predictions going out 5 years, so going out to 2026, and I believe the stock is going to hit about $565. And I show in that video how I get to that number based on today's stock price. So I got a lot of good feedback from that video. Most of it was good. I would say 95%. Now there were 5% of people that were arguing with me that my valuation wasn't correct, that historical PEs and earnings is not really a good valuation look in the future for Alibaba. And a lot had to do with just the risk of Alibaba itself and competition, right? So JD.com, Pinduoduo is getting more involved. And if you think about it, I mean, Alibaba, you go back a few years, it was 83% of the Chinese e-commerce has gone through Alibaba. Where you look at today, it's just around 60% is going through Alibaba. Now, Alibaba's getting into cloud computing and some other stuff too that's continuing to grow their business. Not only that, but the Chinese market is really the biggest in the world. So even having two other big players in that space like JD.com, Pinduoduo, Alibaba is still doing well, but there's still a strong argument that's been made that, you know, Alibaba may never get back to $300 a share. Their valuation right now, it's actually gonna get worse. And so what I thought I would do in this video is look at it from a complete analytical, fundamental view and say, okay, based on today's stock price, you know, what is going to happen going out into the future, and how really is Mr. Market looking at Alibaba's valuation right now at $213 stock price right now? How is Mr. Market valuing Alibaba based on the current market cap? So what I'm going to do is I'm going to do a discounted free cash flow method and basically back into the stock price today or the market cap, and then take a look at, you know, what were my growth rates to get to the stock price today. And then we'll take a look at it and say, okay, does this make sense or not? Does Mr. Market, is it evaluating this company correct or is it not? So please join me today. If you get some value out of this, please smash that thumbs up button. Really helps out this channel a lot, pushes the video out to more people. If you enjoy this type of content, I encourage you to subscribe to the channel. And I am an Alibaba shareholder myself, so just keep in mind I am bullish on this company overall. So let's take a look at my discounted free cash flow right now. All right, so you can see my discounted free cash flow here. Now, I did get this spreadsheet from another YouTuber. His name is Investing with Frank, or that's his channel name. I'll put his link down to the description to that video where he actually shares this discounted free cash flow format. You can go to that video and actually not download the specific spreadsheet, but you can go in there and copy and paste into your own spreadsheet, which I found very, very helpful. I liked his format a lot better than what I was using before. All right, so let's take a look at this. So Alibaba, ticker symbol BABA, shares outstanding. So keep in mind these dollar amounts are in billions and US dollars. So we have $2.7 billion for shares outstanding. The trailing 12 months free cash flow. So this is kind of interesting. So I have $36 billion. So what I did is I went to Yahoo Finance. And keep in mind that this is in Chinese yuan, so it's not in US dollars. So you got to be really careful about that. But if you go to the free cash flow for the trailing 12 months, they have $231 billion. But again, it's in Chinese yuan. So what I did is actually plug this into a Google calculator that turned into US dollars. Keep in mind also that I actually went to my Schwab account and I looked at the trailing 12 months and it said $39 billion. It automatically converts it to US dollars. But when I did this on the converter on Google, I came with 36 billion. So I'm being conservative and using the lower amount that came up. So that's kind of what this value is here. We got our net, then we have our net debt number. We have a discounted rate of 15%. And so what the discounted free cash flow does is actually projects out free cash flow over the next 10 years and then kind of backs into the intrinsic value of the company. And the big piece of it too that is an input for me is what growth rates are. So if we take a look at here, current share price is $213. Just to show you that that is accurate, we'll take a look at what Yahoo said. which we kind of saw before, but $213. So you can see that I'm not just saying that. Market cap is about $580 billion according to Yahoo Finance. I come with roughly $577 billion, so pretty close there. All right, so in order to get my intrinsic share price value, getting back to this is what I did. So if I'm Mr. Market and saying, okay, well, the next 1 to 3 years, what do I project the growth rate going to be? I'm saying, okay, Pinduoduo, JD.com is going to increase their market share of the Chinese e-commerce. So they're going to eat up Alibaba's share in Chinese marketplace. Not only that, but Alibaba is hurting because of the fine, the $2.8 billion. People are afraid that the Chinese government is going to potentially put more sanctions on Alibaba, is in there looking over them, constantly on them. So I'm going to say that their growth rate going out over the next 3 years is going to be 12%. Then I'm going to say, okay, I'm also pessimistic about this company as well beyond that, and their growth rate is going to continue to decrease over the next 3 years beyond that point. So I'm going to say that the growth rate for this company going out to 4 to 6 years is going to be 7%. I'm still continuing to be pessimistic about Alibaba, Pinduoduo, J.com is going to get more involved in their market space. They could continue to struggle, which they're not struggling, but that's kind of the thought process. And the growth rate is going to continue to drop down to 5% from 7 to 10 years. So again, summarize 1 to 3 years, 12%, 4 to 6, 7%, and then year 7 to 10 at 5%. So based on that, I get an intrinsic value of about $212, which is roughly what the current share price is. Now we have to say, do these growth rates make sense? Do they make sense? So let's first take a look at what Alibaba did this past quarter through March 31st. And I have their quarter results right here. So as you can see, this is as of, they announced this on May 13, 2021, but this is through March 31st, 2021. All right, so how did Alibaba do? Because we're hearing in obviously a lot of the news, hey, they had a loss, first loss they've had since they've gone public. They're in trouble. What is going on? So their revenue was 64% up year over year. So not the 12% what we're estimating. It was 64% year over year. Now, they did have a loss, but it had to do with that $2.8 billion fine that they did. But keep in mind that their revenue was up 64%. So how did they do as far as the entire year? Because this was a quarterly number, right? So if we take a look at the entire year for March 30, period ending March 31st, 2021, annualized, it increased 41%, not the 12% that we were talking about before. So 41%. It's like, okay. And then we take a look at their 2022 guidance. What is that going to be over the next year? Well, they kind of talk about it up here and then also farther down, but they said we expect to generate over RMB 930 billion in revenue in fiscal year 2022. So if I convert that to US dollars and then compare it against 2021, that's a 36% growth rate. So again, if we take a look at what I'm projecting 12%. So does that seem correct? So they did 40% last year. They're expecting to do another 36%. Yes, that is a drop by 5%. But is it the 12%? Not even close. If we take a look at Yahoo Finance, and let's take a look at what analysts said that this company has done over the last 5 years, almost 30% growth over the last 5 years. My estimation is 12%. So again, does that seem right or not? Let's even go further than that. Let's take a look at going back even further. So let's look at a 10-year. So their EPS growth 56%, sales growth 60%. Now you can make an argument, yeah, it's gone down. Or if you look at the last 3 years, the EPS growth is 31%, sales growth is 40%, but you're still talking massive growth overall. Yes, it's going down, but it's still amazing numbers. So Mr. Market at this point is really just very bearish against Alibaba. They don't think they're even come close to what their projections are out into the future. So you have to really ask yourself as an investor, and I'm a value investor myself in long term, does this seem right or not? And I highly believe that this is incorrect, that Mr. Market has completely mispriced this company. And can be a really good opportunity for us investors to look at this and say, when Mr. Market has priced this company or a company incorrectly, we can actually buy it at a very cheap value and see it grow. And I'm not saying that this is, not risky. There's certainly risk when it comes to Alibaba and any kind of Chinese stocks for various reasons, obviously. But if I were to say, what is more of a conservative approach to Alibaba, I would look at it and say, okay, the next 1 to 3 years, what do I think that they're going to do? I actually think they're going to do probably 30%. But even saying a conservative approach, I could say, 20% is kind of the low case scenario for this company over the next 1 to 3 years, expecting they're going to be at 36% in 2022 from their projections. Then we say, okay, the next 4 to 6 years after that, we're going to see continued drop off potentially in their revenue and earnings. So maybe it's a 20% growth after that, right? And then we'll be even more conservative and say, okay, well, they'll continue to drop and it'll be a 15% decrease going out into the future. So let's take a look at what that is and what our discounted cash flow method is overall. Need to open this a little more. So I'm coming with an intrinsic value of this company of $370. That is a margin of safety of 75% on this company. So, and to me, this is being conservative. I think this is a very, very good chance that they're going to be hitting these numbers out into the future. And I'm an analytical person. I'm an accountant. That's what I do as my day job. That's how I view companies. They can say whatever they want, that they're going to do on the future, but I want them to be able to prove it to me historically and then looking out into the future. So I think Alibaba is in a really good place right now. And this is not financial advice. This is not telling you to go buy or sell this company. This is how I'm viewing it myself. My cost basis is around 216, 217 right now on Alibaba, and trading around 213 right now. It is just unbelievable. And again, there's risks that are associated with Alibaba, but this is how I'm viewing it. This is how the Mr. Market is viewing the company right now. So again, those are my thoughts. I would love to hear from you guys. What do you think about my analysis here? Does it make sense? Is Mr. Market wrong? How do you view Alibaba? Do you think it's going to grow out to $300 plus a share? Again, my projection is $565 going out to 2026. So thank you so much for watching. I really appreciate it. Again, if you like this content, I encourage you to subscribe to the channel. Got some value, smash that thumbs up button. I'll catch you guys on the other side. Take care. God bless.